G'day, g'day. It is Wednesday, the 15th of July 2026, starting on the daily. Very interesting day yesterday. You can see that the previous day's low, so the Monday's low, was swept as well as the high was swept, and we've closed rather bullish, and I'll go into what actually happened yesterday. But just interesting to note how well this 4,000 level is holding, even though we had this extremely bearish day on Monday. That's basically just turned out that the institutions were pushing price down back to that 4,000 level to fill more orders in, and they've done that. It's retapped into last Friday's volume profile zone and point of control and sold from there. So today might be actually a little bit tricky because we have swept the high and swept the low, and we're sort of caught in the middle of all of this. Now, the big news out of yesterday, of course, swap down into the intraday chart and we can quickly look at the CPI data coming out of the US. Basically on the release of that news, all the institutions obviously had positioned themselves for this news beforehand, but you can see the market repricing. The US CPI really missed its target, so all the forecasts were a little bit of softening, but it missed quite dramatically. If we look at the core inflation month on month was now 0. The consensus was 0.2. Year on year is 2.6. Month on month for just the inflation was down negative 0.4, and previous was 0.5. So that's almost a percentage change. And the inflation rate for year on year is now 3.5. So that immediately puts a little bit of thought into the Fed saying that are they going to raise interest rates in September or not now? And the new Fed chair, Warsh, his testimony is 12 a.m. my time, and that'll be a big indication because the market is always forward looking. So it depends on what the words that come out of his mouth, which is obviously a prepared speech that the institutions already have access to, as to whether or not the Fed will actually raise rates. Now, the washout of the news was money markets are now pricing in a 50% chance of the rate hike. This just seems to change day by day at the moment, is going on, but these inflation figures were weighted on. And so that obviously eases expectations of a rate rise. But now on the other side, you've got Trump saying that they're reinstating the blockade on Iranian vessels transiting the Strait of Hormuz, and calling all countries who are going to benefit from these US efforts to now pay costs to have their ships transit the Strait of Hormuz, which of course is inflationary. So we're just it's like a game of tennis or volleyball. We're just hitting the ball back and forth over the net, and the markets are just jumping from one bit of news to the next. So very volatile. We see this 5-minute candle here on the news, and if we drop down to a 1-minute chart, that's all basically on the release of the news. That's a 600 tick move straight up. So 4,000 level held, and we'll back up into this volume profile zone from last Friday. Crazy times. Today, we'll switch on the fire lines now. So we are stuck right at the dynamic value level. The big thing is I do not like trading inside a 600 tick 1-minute bar. That's the range at the moment, and we could easily come down and sweep the bottom of that range, or buyers might come in now that we're filling up this massive gap created by that 1-minute candle, and we'll start moving up. Either way, at the moment there is no level for me to trade off. Inflection points below us. We do have this hourly low here that found support on the retrace back down through that 1-minute news candle. But the only trade I can see would be sells from the value area low or the upper value level here if we see a nice reaction. But at the moment you are right inside the middle of this range, and if you know anything about trading, a lot of the traders just call this the abattoir, where you are going to get slaughtered as price will try and move up and down to trap as many traders as they can before they take it in one direction. So frosty.